On behalf of Guru KPO, I, Professor B.K.Jain from Biani Institute of Science and Management of Biani Group of Colleges, welcomes you in this session. The topic for today's discussion is Indian Financial System, Objectives and Role in Economic Development. At the outset, I would like to briefly mention that development of an economy depends upon how strong is the Indian financial system. At this stage, I would like to make a particular mention of worldwide recession 4 or 5 years back. Indian economy remained unaffected because of this worldwide recession, because of very strong financial system and a very positive role played by three key regulators of Indian financial system, that is Reserve Bank of India, SEBI and IRDA. This financial system consists of 5 broad areas, and these 5 broad areas are financial markets, financial intermediaries, financial instruments, financial services, and regulatory bodies. I would like to briefly explain each of them in a minute or so. Financial markets are the markets where financial transactions are taking place. There is no specific place like vegetable market or cloth market. Whenever a transaction takes place, it is deemed to have taken place in the financial market. Financial intermediaries are those institutions which act as intermediary for collecting savings and converting it into investments. Financial instruments are those documents through which money is collected, like shares, securities, deposits. Financial services are the services rendered by the financial institutions. They are of 2 types, fee-based and fund-based. And lastly, regulatory bodies. They play a very important role in the financial system, and 3 key regulatory bodies are Reserve Bank of India, Security and Exchange Board of India, and IRDA. Now I come to key objectives of this financial system. The objective number 1, as I earlier said, it is link between saver and investor. The most important function of a financial system is to collect savings from those who have surplus money to save and finally convert it into investment and making it available to those who need the money. Another is allocation of risk and reduction of risk. Now, very important function of financial system is it reduces risk and allocate risk. Now, reduction of risk, I give you example of LIC. When we pay premium, our risk of life is covered. When we deposit money in bank, our risk is reduced and we also get adequate return on the same. The another important function is that the financial system makes information available to investor, where to invest, how much to invest, and what would be the return on that investment. Next is making available money for production of goods and services. This is the most crucial role. The entire financial system exists because it collects money and make it available to those who need it for production of goods and services. And lastly, this financial system also creates liquidity in the market. Liquidity means ready availability of cash through banking system. Now, last is the role in economic development. Now, we can classify this role in 3 parts. One is economic development, which consists of increase in the national income, then increase in the national income leads to more capital formation, increase in production of goods and services, more exports, and ultimately favorable balance of payment. Social development, it means increase in the per capita income, which leads to ultimately good standard of living, and that is finally converted into a good senior citizen. Lastly is transformation of economy from rural to urban, from agriculture to industry, from low saver to high saver, and from underdeveloped to developing and finally developed economy. Thank you. For further details, please log on to www.gurukpo.com.